Hello, good evening, ladies and gentlemen, traders and investors. This is Alex from MarketWise Asia. Thank you for watching this live stream both on Facebook and also on YouTube as well. So today's date, it is the 5th of May 2025, as usual, a Monday night over there, okay? All right, if you can hear me loud and clear, please say a hi to me in the comments or in the chat, both on YouTube or on Facebook. Okay, just to let me know that everything is good, everything is well. You can hear me loud and clear. Okay, I'm friendly, I don't bite. Okay, so please say a hi to me. I can see that Dave, Will have already said hi to me. Okay, so please say a hi to me. Give me a like and share if you could. Okay, if you're watching this on YouTube, please subscribe to our YouTube channel. Give us a follow as well. If you're watching this on Facebook, if you haven't so-called follow our Facebook page, also do so-called follow our social media. All right, hello Pei Wen, hello OOCE88 on YouTube. Okay, this is the first time I've seen this username on YouTube. Okay, this is the first time you are watching MarketWise Asia. Hello William. Okay, all right. So I believe a lot of you here are Singaporeans. Am I right to say that? So the election was just over. Okay, so the dust has settled. All right, so PAP will be the main party, so-called the majority power again. Okay, I'm not here to tell you who you should vote or who you should not vote. Okay, but this is a dust has settled already. But some of the things I just want to comment because I can because this is my channel. Okay, so this is my live stream. I just want to comment certain things that I think will be objective. Okay, I mean, I'm not trying to stir an emotion. Okay, this is not to tell whether PAP is good or Workers' Party is good or whatever it is. Okay, so is it okay if I share some of my thoughts on the general election? Just want a channel for me to share some of the things. Is it okay or not? Okay, just type okay in the comments. Okay, so something that's more objective. Okay. So even if you say not okay, I'm still going to share. Okay, so just to take maybe 5 to 10 minutes of your time only. Hello, Hadley. Hello, Jason. Hello, Tessa. Okay. All right. So yeah. So if you are Singaporean by now, you should know that the PAP is again the ruling party. So you can see that based on the media, based on the news, okay, saying that it is a landslide victory. Okay, yeah. So out of the 90, is it 97 or 93 seats they get 87 seats? I think the Workers' Party only 10 seats. Okay, maybe plus 2 the NCMP, non-constituency member of parliament. Okay, so if you look at the media, right, they say it's a landslide. Okay, but my personal view is that okay, the PAP in the next 5 years or so, okay, they need to buck up, okay, because I think they should be shitting in their pants right now. Okay, because okay, even though it seems like it's a landslide, okay, winning like 87 out of the 97 seats, right, and the overall I think they improved compared to 2020 by about 4 percentage points to right now about 65%. Okay, supportive of them, right? But if you actually look at the so-called the opposition, okay, that has the Workers' Party inside, okay, the PAP actually had a very tough fight, okay, if the Workers' Party is contesting in that GRC or in the SMC. So, about 50+% compared to 40+%. So the margin, okay, is I think about less than 10%. So it's very close. Of course, if you talk about the other opposition party, then it is a landslide victory. Okay, it's like 80+%, 75%, and that things, right? But the issue is okay, you need to understand that okay, the incumbent PAP, it has a lot of advantages. Okay, all right. So they have a lot of manpower. They have a lot of so-called money budget. Okay, and certain things. Okay, they can do what they want. So for example, the electorate boundaries. Okay, they can change their electorate boundary. Okay, whether you want to call it gerrymandering. Okay, it is up to you. So I'm not here to argue with you whether it's some agree, some minorities agree. Okay. But for me personally, I used to live in Bukit Batu SMC lah. But before Dr. Chi can come in, already left already. But you know, they kind of absorb in when they see that a certain party is doing well. So it is up to you. But anyway, they can do a lot of things. They can change the boundaries. So a lot of these advantages is inside. The PAP can do a lot of things, okay? And not only that, okay, in February, we already know that, in fact, I said I know, okay, the election, it is coming because, you know, they give a lot of so-called carrots, okay, CDC voucher, and all these are cash, as good as cash, okay, and a lot of things, okay, and that, and not only that, okay, yes, like Sebastian say, right, this is exactly true. In hindsight, okay, the long weekend actually helped them, okay. A lot of people away from long weekend, if those voters vote, maybe opposition will win. So do you really think that they choose the long weekend on Labor Day, it is by chance? I don't think so. I don't think so. Okay, they purposely choose this long weekend because, okay, a lot of these are relatively younger voters. Okay, they are overseas. These sort of travel plans they already made beforehand already, right? So typically, these relatively younger voters can be 20 plus, 30 plus, or even 40 plus like me. Okay, these are the relatively younger voters that could swing to the other side. As we know, okay, typically the older generation, how you define old is subjective, but typically the older generation tend to be more supportive of the PAP. So, you know, in fact, this is one of the lowest voters in the history, I think, if not mistaken. I mean, that record low voters. So this is also in their favor. Okay, you can see that a lot of things are in their favor. Okay, change the electorate boundary, give out CDC voucher, manpower. They can choose, you know, the date when to hold the election. Okay, and from the dissolve of the parliament until the election day, it is very short. Okay, they are very short. Okay, so a lot of things are in favor, but in spite of this, right, okay, the PAP, when contested against the Workers' Party, it only win slightly marginally. For example, like Jalan Kayu, Ng Chee Meng, okay, versus the Workers' Party. The Workers' Party, the Kenneth Foo, is not exactly, you know, well known, okay, not like heavyweight, that kind of thing, okay. So it kind of still struggle. Of course, you know, you might argue that Ng Chee Meng is not well liked. Maybe, you know, the NTUC Alliance saga also have a say in that kind of thing. But anyway, yeah, my view is that, okay, on the surface, you might think that the PAP actually won by a landslide. But in actual fact, when contested against the Workers' Party, it is not so clear cut. They are actually, in fact, struggling, which means that, okay, if the Workers' Party fielded, okay, all the candidates into all the GRC and SMC, okay, I think, okay, the PAP will struggle, okay. It is not because, you know, the PAP won a lot in 75%, 80% in the west and in the central area. I would say that it is because the lack of quality opposition that lead to the winner. So this is my personal opinion. And by the way, okay, like for example, the Mountbatten and also the independent candidate Jeremy Tan. Okay, all right, he is actually a very quality candidate compared to the Mountbatten incumbent PAP candidate. I won't name her. I can go and search her out. Okay, I think that the PAP one, it is not up to par. But Jeremy Tan, it is of substance. Okay, when I first heard of Jeremy Tan, independent candidate, what Bitcoin, inject Bitcoin, what kind of nonsense crap again? But if you go and hear his rally, if you go and his website and see his policies or proposal, it is actually quite quality one. Okay, you can check it out. So it is not by chance that the independent candidate Jeremy Tan can get about 38% of the vote. Okay, given that it is independent candidate. Okay. All right. Yes, the Jeremy Tan is really not bad. I really feel that it is not bad. Okay. Anyway, it is enough of the my view on the election. I just feel that, you know, it is actually they need to back up, okay, the incumbent PAP in the next 5 years or so. So let me just share my screen right now. Okay, enough of the views on my on my political scene. Okay, just my personal view only. Okay, all right. So as usual, a disclaimer first. Whatever I share today, it is just for education purpose. Okay, it is not a buy and sell signal. So please do your own due diligence. So as I mentioned, okay, if you're watching this on YouTube or on Facebook, do give us a follow, subscribe to our YouTube channel, and all our social media links, okay, are over here in the comments in the chat. Okay, this is what you will see. I'll post the link, okay, in the browser. So the Facebook, Telegram channel, you should also subscribe, because I share the breaking news, the price mover, the morning wrap, okay? So basically to give you an overview of what has happened in the market, okay? Right, YouTube, TikTok, as I mentioned, TikTok, I started to recently share a lot of content, so you should also subscribe to our TikTok channel as well, okay? So all these are over here. Once again, post the link in the comments, okay? And just to let you know, okay, before I go into the economic data for this week, right, okay, just to let you know that this, not this coming, is next week, okay? Next week, I'll be holding a live webinar, okay? Unlock the secret patterns hidden in the market on the 13th of May. 13th of May is next week, Tuesday, 7:30 p.m. to 9 p.m., okay? So it is Zoom, so it's a webinar, so it is a Zoom, Zoom online, okay? All right, so I'll share with you how to spot repeatable market patterns using seasonality, given that the market condition, okay, is now so-called better now and almost to a bit normal right now. Okay, I'll share with you why or when certain sectors tend to outperform, okay, with real case studies and such, okay, and why most traders overlook this powerful data and how you can use it, okay, and how to avoid chasing hype by focusing on timing that's backed by history. So you know exactly, for example, you know, May, you need to trade what stocks, what sectors, what industry you need to look at. Coming to June, okay, which are the sectors, that industry that you might need to look at, okay? So you don't have to chase all the hot stocks, the hype and such. You know exactly what stocks, what sector, what ETF to look at, okay? So this is going to be a webinar. So I'll post the link in the comments. So this is a Zoom sign up page. So just register for this, okay? Name, last name, email, and phone number, just to send you a reminder SMS if you are in Singapore, okay? No spam, okay? So this is just this, okay? And yeah, and this is going to be educational webinar. There will be case studies, there'll be insights, there'll be knowledge, okay? So do register for it if you are especially new to MarketWise Asia. By the way, okay, SVI members, okay, do not have to register for this webinar, okay? Do not have to register. You already know all these details and all this knowledge, okay? Once again, I'll post the link in the chat in the comments, okay? All right, so yeah. So this week, the economic data for this, oh, by the way, yeah, so the social media, right, in case somehow you cannot see the link in the comments or what, right, you can actually scan this QR code, okay, scan this QR code, okay, follow our social media, okay. This is on demand one, okay, but as I mentioned, okay, this next Tuesday, I'll be doing a live webinar, okay, a live, so you can ask question, okay. Of course, in live, everything is better because, you know, you can hear me speak live, okay, and ask question on the spot, okay. All right. So this coming week, okay, what are the economic data for this week? Okay, so let's head over to last week first. Okay, last week first, okay, just to let you know some of the things, that key things. Okay, last week, okay, I think you might have heard of some people talking about that. Okay, the advanced GDP, okay, that's the first thing that's coming out. Okay, the GDP actually contracted, the economy actually contracted minus 0.3%. Also, this got some people worried. Is it that the US is going into an recession soon? Because, you know, by the normal so-called definition, if there's a 2 consecutive quarter of a negative GDP, it is like, you know, a recession. But it is actually not true. Okay, not only that, it doesn't mean that you have to be 2 consecutive, but you also need by this. Is it the neighbor? I call it the NABE, okay. I forget what's the name already. Recession. Neighbor recession. Okay, I call it the NABE recession. Okay, you need the National Bureau of Economic Research. You need to say that there is a recession. Okay, then there is a recession. It is not like based on the 2 consecutive quarters of negative GDP growth, then it is like automatically a recession. It is no. Okay. The neighbor, the NABE, need to say that it is going to be recession, then you say that. Okay. But anyway, right? This is the first time that there's a so-called negative GDP lah. Okay, I'll go through with that later. But this week, okay, this week, all right, this week, what is the economic data for this week from the 5th of May onwards? Okay, so this week, not much. Okay, just now 10 p.m. there was this service PMI. It is better than forecasted. Okay, all right. So the key data release that's going to be out this week will be on Thursday, Singapore time at 2 a.m. Okay, the FOMC meeting. So they'll decide whether there'll be the interest rate and such. But okay, very likely the interest rate will be kept the same, because you can go to the CME group, okay, the Fed Watch tool over there. So you can see that the next FOMC meeting is in 2 days. This is based on US timing now, okay? Or you can see that the coming May, 7 May, it is actually the US timing, the US date, okay? All right, 99% chance, okay? 99% chance is going to stay the same, okay? Stay put, okay? So 425, 450 interest rate. So no change. But of course, you know, at 2:30 a.m. Singapore time, okay, on the 8th of May, this is where Jerome Powell will actually speak, depending on how dovish or how hawkish his tone is, okay, that is going to actually move the market. Typically after 2:30 a.m., okay, initially 2 a.m. there will be some volatility lah. Then after that, kind of slow down, okay, and then 2:30 p.m. when he starts to speak, then there will be another volatility again. So this could cause the market to go up or go down. So again, we won't know, because, you know, he can say good things, the market still can go down. So he say bad things, the market can still go up. So it is either way. So depending on what the media want us to believe in. So this is just to let you know that 2:30, there will be more action. So which means that from now until Wednesday, the market might not have much movement. So, you know, should be relatively muted, okay, until Wednesday US timing, okay, then the market will start to so-called show its hand where it wants to go. So everything clear so far? If everything okay, just type okay in the comments once again, okay? So if you just join me, okay, do give me a like, share, and comment, okay? Also say hi to me, okay? I really appreciate if you think that this is useful, you can share it with your friends, your relatives, and such, be it on YouTube or also on Facebook. If you're watching this on YouTube, okay, do subscribe to our YouTube channel. Okay, so before I go into the technical aspect of the market, okay, how's the market doing? Okay, so it's slightly negative today, but I'll go into the macro outlook first. Okay, so for those who just joined, okay, I have a live webinar on next Tuesday. So you can see over there, like I won't go through again, just like I mentioned already. So you can register, okay, at the link over here, okay, bit.ly/market-secrets-1305. 1305 is just the date, 13th of May, okay. All right, so SVI members do not have to register. Okay, so I'll go through the macro thing first, okay. So as you might know, I think for the past 1 or 2 weeks, I already mentioned that the earnings, okay, so most of them have came out already. So a lot of these earnings, the company, okay, they actually beat expectation. So about 70%, okay, almost more than half, in fact, like 3/4 has already reported their earnings already. So with 76% beating estimate, so that is just slightly above the 10-year average of 75%. So, you know, it's still pretty much in line. So, okay, if the company's earnings is still growing, okay, all right, means that generally the market should be fine. You know, one of the so-called factor that causes the stocks to go up or go down or to go up. Okay, one of the factors is profitability. Okay, if company generally is profitable, okay, generally the market will continue to go higher. So one of the factor it is actually profitability. Okay, you can go and Google the factor-based investing. Okay, value is one factor. Okay, profitability is one factor. Okay, low beta is one factor. Momentum is one factor. Seasonality is also actually one factor as well. Okay, in case you don't understand what I'm trying to say, okay, just to let you know, for example, an analogy, okay, what is the factors that cause high blood pressure? You know, the factors is like, you know, you are obese, you have a very bad diet, okay, your genes, these are factors that cause you to have high blood pressure. So what are the factors that cause you to outperform the market if you choose certain stocks and such, okay? These are things, okay? Profitability is one of them, okay? All right, so Q1, the earning growth, okay, is tracking at 12.5% year on year, okay? It is slightly than the forecasted late last year, so this is good. But, okay, but Q2, you need to be a little bit more careful already. The forward guidance, okay, will be down to, okay, 5.8%, a sharp drop from the 11.3%. This is because, okay, over the tariff uncertainty and such, okay. All right, so because and inflation and all this, okay, a weaker Q2 outlook, all thanks to Trump, okay. So this is the earning growth estimate coming down. I'll show you the chart. Hello, Bernard, okay. So this is the chart that I'm going to share with you, more of easy visualization over here. Okay, so you can see that the S&P earning growth has come down since the end of 2024. Okay, so this is previously there was a lot higher, like for example, Q2 is 11.3%, then Q3 this year is 12.4%, then Q4 is 9.6%. So the so-called the analyst has already come down the growth estimate. So Q2, because of the so-called the tariff thing and such, okay, will be reduced to 5.8%. Okay, then Q3 down to 7.9%. Okay, then Q4 7.2%. But all in all, even though it has revised down, okay, but the also called overall there's still earning growth. Okay, it is still positive, not as bad as it seems like negative earning growth. So as far as I'm concerned, as of now, not so much to worry about. Okay, it is still growing. Company is still growing. Okay. All right. So let me hit and not only that. Okay. The tech, certain tech also show strength. Like for example, Microsoft. Okay, and Meta highlighted strong AI and data center capex. Capex meaning capital expenditure. So they are willing, okay, to spend more on their infrastructure on AI and data center, committing over 152 billion. Okay, so this is kind of ease the fears that there will be a slowdown in the tech investment. So AI, you know, tech itself, it is still growing. Okay, but okay, from those that are exposure to consumer one, okay, Apple and Amazon actually gave a softer guidance, okay, from the weaker China sales. Of course, due to what? Due to the tariff lah. As usual, everything due to tariff lah. Okay. And then the consumer demand weakening. Okay, the McDonald's reported negative same-store sales and lower traffic. Okay. Starbucks and Chipotle also noted softer demand. Okay, especially from the low-income consumer. So despite the mixed signal, for example, from certain companies, especially from the consumer defensive stock and such, okay, the Q1 earning growth still has been holding up pretty well. Okay, like I mentioned just now, the chart, right, the earning growth has been coming down, the estimated. So earning growth expectation currently at 9.5, subject to further adjustment. Okay, all in all, okay, the recession risk, it is still low. Okay, so historically, okay, when there is a positive earning growth, okay, it typically the market, so-called the economy, will not be in a recession if still coincide with a positive earning growth. So what do I mean by that? So this is another chart that I want to show you over here. So you can see over here, okay. All right, so positive earning growth has not been associated with recession. You can see that this recession, okay, this, orange highlighted one is the recession. You can see that, typically when there is a negative earnings growth coming down, then based on the historical data, okay, since 2001, okay, dot-com crisis, then there is a recession. When it is above, I say not above, I mean that positive earning growth, okay, typically no recession. It is only when the company started or forecasted to have negative earnings growth, then, okay, there will be a recession period, okay. Once again, maybe slightly, but overall you can see that when there's a sharp earning growth negative, right, then there's a recession. Okay, so all in all, I think overall not to be so worried about the economy yet lah. Okay, so yeah, and of course just now I mentioned about the negative GDP growth, right? So the Q1 GDP shrank by 0.3%. Okay, slightly worse than the negative 0.2% forecast lah. So marking a surprise economic slowdown lah. Okay. But you need to understand that, okay, this so-called this GDP shrinkage, right? It is due to the import surge, okay, before tariff. So the companies really know that there is this so-called tariff thing. So they started to import, okay, a lot more, okay, hopefully before the tariff started. So as I mentioned, right, was due to a sharp jump in imports, the biggest in nearly 5 years. As I mentioned, right, the businesses stock up ahead of the tariff hike. So you need to understand that, okay, how do they calculate, okay, the GDP, okay? So basically, okay, GDP, it is consumption, okay, plus investment, okay, plus government spending, okay, plus export and minus the import. This sounds like going back to the economic lessons, okay? Economics, so like I study in JC. So basically, okay, export minus import. So if there's a sharp increase in the imports, okay, all right, what happened? Okay, what happened? Then the import component, okay, will become negative, right? So when there's a negative component, so consumption plus investment plus consumption, then they have a sharp negative thing minus the large negative component of imports, right? Then the GDP will actually come down, right? Does this make sense? It's just simple maths, okay? Because there's a sharp surge in imports, okay? Does this make you feel smarter already? You can go and tell your friend, GDP, consumption, investment plus government spending plus export minus import, because of the sharp surge in the imports, that causes the GDP to come down. Okay, does this make you feel smarter already? If make you feel smarter, okay, just type yes in the comments, okay? Also a way to engage you, okay? So basically, yeah, okay. Yeah, feel smart, okay? Feel smart, see, be smart, okay? Correct now, okay? So these are things, this is the reason why. So in case you have any friends that say, oh, the GDP actually came down, there's a possibility of a recession, okay? Ask them, my kanjiong, it is because of the sharp surge in imports. GDP, consumption plus investment plus government spending plus export minus import. So you surge in imports, you increase the negative component of that part. Okay, that will cause the overall negative contraction. All right, sounds pro, right? Okay, yep, sounds pro right now. So understand that. So this is big economic. Okay, but anyway, the consumer spendings are still holding up right now. So as I mentioned, I think many times before, consumer spending is still doing quite okay. Personal consumption still rise 1%, down from 4%. Okay, but it is still above the expectation of 1.2%. Okay, like what I mentioned just now, the so-called the tech. Okay, Microsoft and Facebook, Meta, still contributing to the capital expenditure. They're still spending and spend and spend. All this spending, okay, will help the economy as well. So you can see over there, right? So the business investment, so the capex still jumped to about 22%. Okay, driven by the preemptive equipment purchases before the potential tariff increase. Okay. So like I mentioned, right? So the recession, it is not a like a base case. Okay. So all these negative GDP print, the resilient consumer, this is just a temporal GDP print, okay? And the business spending suggests that a recession isn't a likely scenario for now. So most likely there won't be a recession, okay? So just now I talked about the GDP in Q1 was dragged down by the sharp rise in the imports. So I think this is one also a chart for you to visualize better. Okay, so this is the negative 0.3%. It is due to the sharp surge in the imports. Okay, all right. So I mentioned the Q1 dip, it is slightly temporal. So by Q2, it should be back to normal again. Okay. Yeah. So all this, there still could be a tail risk recession, but I think not that important right now. Okay, so all in all, okay, in fact, okay, if there's going to be a recession, okay, the good news is okay, the Fed still have the bullets, because right now the Fed just don't want to cut the interest rate like what Trump wanted Jerome Powell to do. So I think this is a good point. I mean, this is a good move, because you do anyhow cut, okay, in case some unexpected things happen, okay, a black swan event happen, that the Fed need to have more bullets to save the economy. Then the Fed can actually lower the interest rate aggressively, okay. So as of now, there isn't a need. So this is still good, okay. So there's, if really need, okay, the Fed could cut rate more aggressively, okay, help them to soften the blow. So as of now, no need, okay, which means the economy, okay, it is still strong. And not only that, okay, the job reports, okay, still beats expectation, okay, so everything is still good, okay. I think the chart, I think no need to see much, okay. So the unemployment rate still stable, okay, I think I mentioned before already, so holding up at 4.2%, okay. The wage, even though the growth, it is slightly lower, okay, but the average earnings, okay, it is still there about at 3.8%, okay, this is still pretty at the average mark, okay. The labor market, okay, it is still strong, so nothing much to worry about. So as I mentioned, right, the Fed is in a no rush state, okay. So the Fed, okay, don't want to reduce the interest rate, okay, even though Trump wanted it to reduce us. I think the Fed did a good job for now, okay. So you can see that this coming Thursday Singapore time, the Fed most likely is going to hold on to its interest rate, no cut, okay. So as of now, this is the macro things that I want to share with you, okay. So all in all, the economy, it is still in a pretty good shape, okay. The GDP one, so-called negative contraction was due to the sharp rise in imports. Everything okay? Everything okay? Ken? Okay. So this will be the macro part. Everything okay? Just type okay in the comments. Okay. Before I move on. So if you like what I share, okay, you learn something new, or you think there's of value, okay, please give me a like, share, and comment as well. Just liking is the simplest. Give me a like, okay. I really appreciate that. If you're watching this on Facebook, okay, do follow us. If you're watching this on YouTube, do subscribe to our channel. Just click on the subscribe button and also like this live stream as well, okay. All right. And if you just tune into this, okay, just to let you know, okay, I'll be conducting a live webinar, okay, next week, Tuesday, just after the Vesak Day holiday, Tuesday, okay. Vesak Day is Monday, Tuesday is the live webinar, unlock the secret patterns hidden in the market, okay. So I'm going through with you the seasonal trend, how you can take advantage of the seasonal trend, okay. All right, right now, especially the market, it is recovering right now. Market is back to more normal, and the seasonal patterns, okay, will work, okay, a lot better right now. In fact, for the past 2 weeks, I've been mentioning to my members, okay, all right, certain ETF you need to look at, certain stock you need to look at, and in fact, I really preempt them that, okay, that the market, I do not think that you'll go below the swing previously, okay. All these are helping them to so-called have a trade plan, plus the seasonal ideas, okay, which stocks to exactly look at. For example, right, why certain stocks tend to outperform, okay, and how why most traders overlook this powerful data, and why you should look at the seasonal data to help you make a more informed decision and help you to be more profitable, and how to avoid chasing hype, okay. You don't have to always chase the hottest stocks, okay. By June, like May, June, okay, July, I know exactly what stocks and what ETF that I should look at, okay. All right, so all this will be mentioned, the case studies, the insight, and the knowledge will be shared in the webinar over there. So I'll post the link once again in the comments. You can go and register if you are new. So the SVI members do not have to register. So basically, as I mentioned, this is just a Zoom webinar landing page, okay. Just register your name, email, and mobile, and you are good to go. The mobile is really just for SMS reminder, okay. So there will be no spam, okay. I'll just talk until here. So let's back to the calendar, remove already. Okay, so let's back to the the market right now. This is the S&P 500 futures. So the market initially came down when the market opened, but right now it is still slightly negative, okay, but I think not so bad. As I mentioned, right, okay, this coming Tuesday, Wednesday and Thursday, Singapore time Thursday, FOMC meeting. So I believe that the market, okay, might be muted. Can we go a little bit down, a little bit? I don't know. Okay, but until then, Wednesday, it decide whether it's going to go up or it's going to go down. Okay, and all right, the if you go to the zero gamma level, the gamma exposure. So for those who don't know, basically this is to tell you, okay, whether the options dealers, they are net positive gamma or net negative gamma. So all this can have influence in the market. For those who don't know what exactly it is, never mind. Okay, when the market, if it's like the 5650 there about, okay, above this, okay, the dealers is net positive gamma, which means that the market will be less volatile, okay, and it will be good for the market. If it is below 5650, then we know that the options dealer is actually a net negative gamma. There could be higher volatility. So if you take a look at the S&P cash index, okay, all right, so about 5650. So previously, okay, you can see that, okay, 5555. Okay, I was actually expecting, okay, to have some reaction. So the reaction was very short-lived. You can see that after that, okay, reacted, and then intraday, it actually reacted. It came down, okay, but then after that, the market go higher. So right now, the zero gamma level, okay, it is at about there, okay, not exactly the number, but about 5625 to 5650. Okay, if the market can stay above this level, okay, 5650 there about, okay, then the market will be good. Okay, if it goes below, okay, 5650, then there could be more volatility. So if you add in my usual yearly CPR, just now I mentioned, okay, previously I mentioned, okay, that could be a potential resistance level. Okay, so the market hover there intraday for 1 day, after that go higher. So all in all, you can see that the market, it is actually above the yearly pivot point. The yearly one is the black dotted line here. So this is the one. Okay, so you can see that in case you can't see, let me just remove this one so you can see clearer. Okay, typically when market it is above the yearly pivot, we are in a uptrend. When it's below that, downtrend. Above the yearly pivot, uptrend. Okay, above yearly pivot, uptrend. Okay, previously it was in a downtrending mode. Okay, after that, market rebounded higher. So all in all, right now we are still in a uptrend. Okay, all right. So I'm not sure whether you follow me or not. Okay, previously, okay, for the past 2 weeks or so, 3 weeks or so, I said that that could be the so-called the potential bottom. Okay, potential bottom. Okay, my view still remain the same. I said that, for the past 3 weeks, I do not think that the market will go below this low for now, this swing low for now. Okay, all right. So I add back to the usual indicator. Okay, the cloud and such. Okay, all right. So right now the market can do a few things over there. Okay, all right. So but just to let you know, okay, what does this mean? What is this thing? Potential star reversal signal. So prior to that, okay, the potential star reversal signal was here. Okay, so it was in hindsight, okay, it was pretty accurate, right? After that, market just went higher. So right now, there is also a potential star reversal signal. Okay, all right. It doesn't mean that the market will actually, come down. Okay, it just tells us that, okay, the market right now, it is a little bit toppish. Toppish doesn't mean that it's going to come down. Toppish, okay, it is at a high level right now. So there's a potential chance that the market could have a correction. Okay, all right. So we don't know the magnitude of the correction if there is a correction. I repeat now, we don't know the magnitude. So which means that, okay, if I do a naked chart over here, naked chart, okay, which means that, okay, we don't know the magnitude, which means that there's a chance that price could have a few days of pullback like that, okay, and then go higher, or the market might just consolidate near the high, or maybe even go higher, or the market can have a steeper pullback after that, okay, all right, and then maybe go higher again, okay, or the market can just ignore this star reversal signal and just immediately go higher on Wednesday, like that, similar like that. So there are a few potential scenarios, okay. So you need to be prepared so that you don't get caught off guard, okay. But my view remains the same. So I think that the market as of now, okay, will not go below this low, okay. So this is my view. So I have no idea, okay, what will happen in the future, like within the next 1 week or so. So whether it go like that, hover like that, or go like that, okay, you go and ask your guru. Some guru know, like for example, they ask you that, oh, previously you said, oh, short the market, I think the market is coming down, or short the banks, banks are coming down, okay. I don't know, okay. When they are wrong, they just flip prata, okay. They said, hey, I never asked you to short, that kind of thing. So I don't know, okay. I seriously do not know, but we can anticipate certain things, okay. All right. So so like for example, I've already in fact, you can see that I actually asked my members, okay. So for example, over there, is it the market updates over there? Can you see that actually on the May of 3rd, there's last Saturday, okay. I said that they actually the market, it is actually a bit toppish, okay. I say already will have a potential star reversal signal. So today might be a good chance for them to exit, that kind of thing. So for example, myself personally, from these seasonal fund insiders, right? So for example, over there, okay, members. So you can see that, you know, like for example, you know, Wylam shorted gold, Kenny exited with HBR over there. Okay, so for me personally, okay, I also exited the financial sector, which I mentioned previously. Okay, HRB also one of the stocks highlighted and such lah. Okay, all right. So just let you know. So I already mentioned that previously already. Okay, so yeah. So just to anticipate, okay, what could happen. So all in all, okay, all in all, what I'm trying to say is that, okay, if you are doing short-term swing trading, okay, short-term, okay, you should exit when you could, not exit when you need to. I repeat, you should exit, okay, when market is going higher. You can exit when you can choose to exit, not because, you know, market come down a lot already, then while you die down, cut loss, that kind of thing, then you exit, that kind of thing. You should exit when you could, not when you need to. So short-term, this is based on short-term swing, which means that maybe you hold for a few days to 1 2 weeks. I think market, it is at a relatively toppish. Okay, again, I do not know what the market will do. Okay, all right, it can continue to go higher, but I think right now it is not the best time to long, not the best time to long. You are buying at a relatively high area right now. Do you agree with me now? If you agree with me, just type letter A in the comments. Okay, so if I add in the usual one, like the cloud and the CPR and such on. So again, if the market really does come down, okay, then for example, okay, the CPR level will be a good place, level of support that you should watch out for, okay. Same for Nasdaq futures, okay. The CPR level, if really does come down, okay, it should be a level that you should be watching out for, okay. Even for the Russell 2000, it is also the same as well, okay. Should be the same as well, okay. Clear so far? And you know, I know some people are interested in gold. So for gold, you can see that, you know, I actually exited gold over here, exited my sell short gold with a 2R profit over here. So previously, I think somewhere around here, I mentioned that, you know, seasonally it is weak and there was a FOMO hype over there. Okay, it came down. So in fact, on this 1st of May, okay, Labor Day, when it is not a US holiday, okay, the gold actually came back down, have a sharp so-called downward move. This is where I exited, okay. you can see that right now, actually it is supported at the CPR level over here. Okay. All right. If you ask me whether this is a good time to go long, okay, for me, my true answer is I do not know. I do not know. Okay. And ask me to long right now, I also a bit unwilling now. Okay. Ask me to short right now, I'm also a bit unwilling now. Okay. So all in all, I can say that okay, the best timing to short was somewhere around this level over here when for short swing trade, there were profits to be made. Okay. You go down already, then you want to short again. Not so easy. Okay. When it is not so easy, okay, when it is like it is not so clear cut, then I skip lah. You get what I'm trying to say? You don't ask me can short or not, can buy or not. My trading style is that the lowest hanging fruit, it is gone already. Okay, so I won't be touching gold. I won't be touching gold for now. Okay, so in fact, for my SZI members, I also told them right now. Okay, the easy low hanging fruit. Okay, like just now previously when I mentioned you want to long here, don't want to long here, don't want to long here, don't want long here, don't want. Okay, until here, then you want to long. Okay, a bit TMP, right? 头脑派, right? Okay, all right. So for now, I also won't be looking aggressively to swing long. Okay, I will be holding back, step aside first. I do have one or two swing position which I'm still holding on to, but I won't be adding new swing long for now. So I will take a wait and see approach. Okay, but in fact, I do have some other forex position. Okay, these are still doing quite okay. So for equities right now, I won't be aggressively going long. In fact, I won't be longing right now. Okay, this is my view right now. Clear? So the market, it is a little bit toppish. Okay. Oh yeah. Not only that. Okay. Okay. The star potential reversal signal over there. If you take a look at the usual things that the DP gallery, the decision point gallery, you can see that the percentage above the 20-day MA. This is basically the market breadth. You can see that it is relatively at a high, not exactly at the peak yet, okay, but we are approaching the 80% mark, which is at a high level. So typically when it is at a relatively high, okay, there will be some correction that is coming down, that kind of thing. Okay, all right. So even though we are not at the absolute high, but almost there. So you need to be a little bit more careful. Okay, like when market keep going higher, you do not buy. Okay, for short-term swing trade. Okay, all right. But if you take a look at the midterm, okay, 50 MA, all right, the market, it is above 50 already, 50%. So which means that out of the S&P 500, more than 250 stocks, it is above the 50-day EMA, which is good, which means that the market, it is actually improving midterm wise within the next 2 or 3 months. Okay, based on the MA, they're above the 50-day MA. Okay, a lot more stocks are above the 50-day MA right now. Okay, but for the 200-day MA, the long-term wise, okay, we are very close to approaching the 50% mark. Okay, it is good if eventually, okay, more stocks can be above their 200-day MA, which means that okay, majority of the stocks are in an uptrend. Then the bull market, it is really still intact. Okay, clear? Any questions so far? Okay, right now today a bit earlier, 50 minutes mark. Okay, I think I've said what I want to say already. So all in all, I won't be looking too long right now. Okay, so just step back first. Got profits, good to take profits right now. Any question? Any questions so far? Okay. All right, so I also mentioned about this Ethereum in case you don't know. Okay, what do you see right now? Okay, these are just general views. Okay, all right, so you can see that Ethereum, the weaker among the crypto Bitcoin. You can see that typically downtrend, it is below the CPR, below CPR. Right now, okay, you can see that there's some structural change in the price action. Okay, it is above the CPR already. Okay, all right. So overall Ethereum, okay, it is still in a downtrend. Crypto, it is still in a downtrend for Ethereum. But for Ethereum, okay, the downside momentum, it is actually not so strong. So in fact, above CPR, you should not be so bearish, okay? All right. So in fact, I told my members, okay, earlier, okay, you can choose not to buy, okay? You can don't buy, okay? You can choose not to buy, but, okay, you don't go and short it also, okay? All right, so not a good time to short. So this could be potentially be a support area at the CPR level, okay? And if you take a look at Bitcoin, okay, yep, right now it is undergoing a correction, okay, pretty much normal. But if you add in the yearly CPR, you can see that we are above the CPR monthly and above the yearly black dotted CPR level as well. So all in all, objectively, based on just price itself, okay, Bitcoin is in an uptrend. For Ethereum, okay, even though it is in a downtrend, the momentum of the downside move is waning off. Okay, it is starting to be less bearish. Okay. How are you positioning your stock investment? Still holding? Yes, for longer term one, position trading one. Okay, all right. I'm still holding on to my S&P 500, but shorter term wise, swing trade ones, I've exited my position. Okay, all right. So longer term one, okay, I don't buy and hold because I don't really, I don't enjoy doing that. I mean, longer term one, I still have but you don't talk about the buy long term, hold for 10, 20 years. I don't know okay, but longer term ones holding for 3 months, 6 months, or 1 year, that I'm still holding on to it okay. All right, shorter term ones, swing trade, I have exited. Okay, so we need to be clear on the time frame. Short term wise, I am a little bit bearish. Okay, but mid term wise, maybe 3 months forward, that kind of thing. Okay, my view of the market, it is still generally okay. I think that we could still test the all-time high here. Whether it can go higher, okay, I don't know. We still have to take one step at a time. Okay. In case I forget to tell you, okay, I forgot to mention about this. Okay. All right. So May 5月, May is historically strong in a post-election year. So you always hear this adage, people saying that, okay, oh, sell in May and go away, sell in May and go away. That was many years back. Okay, in recent years, May is historically okay, especially in a post-election year. So you can see this black bar over here, which is the post-election. You can see that, okay, May is actually quite strong. Okay, you should say sell in June and go away, not sell in May and go away. Okay, so in short, there could be some near-term correction. Maybe I do not know. I really do not know. Okay, but I won't be aggressively longing now. But there could be some potentially correction. Okay, then second half of May, maybe the market can go higher again. I don't know, but we shall take one step at a time. So just that you know, okay, sell in May is wrong. Historically, May it is actually quite strong. Clear so far? Okay, any questions so far? All right. So only Dennis asked one question. Okay, so if you find value in today's sharing, okay, type letter V, okay, or type value in the comments. So we're ending the session already. So just to let me know that you enjoyed the sharing session, engage with me, okay. Also give me some love, okay. All right, if you're watching this on YouTube, do subscribe to our channel. Watching this on Facebook, do follow our Facebook page as well. Okay. All right, just to let you know again, in case you missed it, next week, 13 May, okay, I will be doing a live webinar. I will share with you how to unlock the secret patterns hidden in the stock market. Okay, I'll share with you how to use seasonal trend, okay, to spot repeatable market pattern. Okay, all right. Why certain sectors tend to outperform, okay, how to use this powerful seasonal data to be more profitable, how to avoid chasing hype, okay, and you know exactly what stocks, what ETF, what industry to look at heading into May, June, and July. All right, so you can register for this webinar over here. Okay, I posted the link already. So with that, thank you so much. Okay, I will see you again maybe 2 weeks later, because next Monday it is a public holiday. So very highly likely that I won't be doing a live stream. So see you in 2 weeks time. Okay, so with that, Thank you so much. Okay, give me some like, love, and comments. Okay, with that, I'll see you again. Thank you. Good night and 晚安 and bye bye.